what are some of the common things that you see that are mistakes or problems because the lawyers haven't done the right job? And I'm talking about with clients that have, estates of 10 million above, and maybe they run their own manufacturing company. What do you see when an attorney when a client brings in and says, "Here's my files. Joe Smith has done my legal work." What do you look for first?
Well, from my perspective, I think you have to have a team. Certainly, the bigger you get. I mean, a client has to have a team around them. I'm not an accountant. I'm not a financial advisor. I'm not an insurance agent. I'm not a banker. I understand.
I thought you were smart, though.
Oh, that's why I didn't do those things.
Yeah. Okay.
So, but no. So at the end of the day, you need to have a client who has a team around them that's collaborating and communicating with each other. Because if the accountant doesn't know what the legal work says, I see it all the time where, maybe there's 8 versions of an operating agreement, or transfers are happening, or gifts are happening, or there's different sort of action items that have been taken over the years, and either it's not been represented to the accountant, it's not reported properly on the tax returns. The amount of times I see a tax return not reflect the corporate documents is pretty staggering, to be honest with you. And
the consequences of that
they're material.
Is capital gain taxes that weren't accounted for properly. You could have gift taxes. You could have you could create estate tax problems because the people aren't thinking through what the consequences, the chain reaction is of what's been presented and implemented. Right?
Or the more common situation is there's just a box of files in some guy's closet that have no really order to them. I mean, at the end of the day, if you can put all the documents in place, you can have trusts, you can have operating agreements, you can have maybe the documents aren't bad in themselves, but the client has no idea what they signed. They have no idea the structure. They have no idea if it's what's best. They come in, they sign documents. Maybe they meet once a year, but there's no organizational structure. There's no kind of documented. It's not easy to ascertain what's going on, and so maybe the client understands it, but maybe his spouse doesn't. Maybe his kids don't. Maybe his partners don't. And usually, until they get big enough where they have to address the issues, or something catastrophic happens, then you've got to clean it all up. Somebody passes away, somebody gets divorced, name your situation, and it's just sort of a mess. So probably the most common kind of mistakes is the right word, is either lack of collaboration with other advisors and or just lack of structure in their actual documents and lack of understanding on the client side. Because from my standpoint, if the client doesn't know what they've got in place, if they can't understand, if they can't explain it to you, then I'm not doing my job as an attorney.
Yeah. So some of the things that I look for to see whether or not the lawyers have really done their job is if you see a client that owns 1, 2, or maybe multiple real estate projects and they're not in an LLC. I don't know how often you see that, but why don't you talk a minute about why, if you've got rental properties that you're using to create cash flow for you and build wealth, why do you want to make sure they're in an LLC?
Well, there's multiple reasons. I mean, number one that jumps out the page is liability protection. I mean, if you own a rental property or multiple rental properties and some liability event happens, which is not uncommon. I mean, certainly
somebody slips on the ice and
breaks their leg, and you get or breaks something worse, or dies, or or it's a residential rental for college kids and they have a party and something bad happens. Well, if you don't have an LLC or some sort of entity structuring or owning that property, who's liable? Well, it's the owner of the property, which is you personally. It's not the LLC. So the primary benefit is, or the baseline benefit is having some sort of an entity. So if something were to happen and they were to sue somebody, well, they're not suing Dave Nabity. They're suing Nabity LLC, which is the only asset of Nabity LLC is the actual rental property. So
they can't get at your other assets.
No,
okay, so when do you go from having one LLC to maybe 2 LLCs, or to have a holding company that owns multiple LLCs?
I mean, that's not every situation's the same. I mean, it really depends on the client and their stomach for complexity or stomach for multiple kind of compliance measures. But I mean, going into talking about other advisors, that's why we want to bring in the insurance agent, the banker, get their opinion as well, because there's not like a set number. If you have three properties,
what's the advantage of having a holding company owning multiple LLCs. Let's say there's 7 of them.
Yep.
What's the advantage of doing that versus the client just dealing with 7 of them by themselves?
Well, I mean, ideally, everything rolls up to one entity. So from a reporting standpoint, you can have one set of kind of QuickBooks, for example, and the holding company kind of handles and kind of, everything rolls up there. But that's another one tax return and another layer of protection. I mean, not only do they have to pierce the entity of the subsidiary that actually owns the property, they've also got to pierce the holding company before they get to you. And if you have a trust, you're creating layers in between.
If you have a holding company that owns 7,
yep,
and the first one has a liability claim, can they get to LLC 2, 3, and 4?
Not if it's structured properly. No.